Hello, ladies and gentlemen. I am Karaoke Andy, and today I'm going to tell you why you should trade with a broker instead of a prop firm. Let's get right into it. So, I will give you 3 reasons. Number 1, it is far easier to be a profitable trader with a broker. Number 2, there are no payout issues. Brokers are basically banks. And number 3, there is no profit sharing. You get to keep more of your money. And at the end of this video, I will also reveal the broker that I am trading with and why that choice makes me 20,000 euros richer at the end of the year. But now let's go back to the 3 reasons why you should trade with a broker instead of a prop firm. It is far easier to be a profitable trader with a broker. When you trade with a prop firm, it is against the business interest of the prop firm that you actually win the challenge. Winning traders costs the prop firm money, whereas brokers, unless you really trade institutional size, make money from the bid-ask commission, aka spread, or other fees that traders need to pay to put on a trade. So if a prop firm is not a broker, what exactly is a prop firm? A prop firm is simply a trading evaluation firm. Let's say you and I are business people and prop firms wouldn't exist yet. We probably would have a very good reason to create one. Do me a favor, go to any broker website and scroll down and read the fine print. You usually find there a statement that says 80%, 86%, whatever, a very high percentage number of retail traders lose money. So is it then a good idea to be a broker? Yes, of course. The bank always wins, right? But to become a broker, we would have to comply with a ton of rules and regulations. A broker is basically a bank. A prop firm, on the other hand, is just a normal company calling itself a trading evaluation firm. It's a genius business idea. Instead of letting traders trade real money in the actual markets, you simply let them do their thing in a simulated environment. Prop firm trading is demo trading. You know, retail traders will lose money with a very high probability. We already established that. So you can put simply more rules in place to move that percentage even more in your favor. So it will be almost impossible for the traders to pass. You charge an evaluation fee. Yeah, that's when you buy a challenge. And that's your source of income. And the very few who do actually, who will be profitable, you just simply pay them out of the pot of challenge fees of the unsuccessful and continue to stay in the demo environment, even as a funded trader. Of course, there are variations to that. I'm just giving you the standard model so you understand. I'm not saying that reputable prop firms like FTMO are doing this, but there are certainly some black sheep out there who push the envelope even further. Since prop firms are not regulated, prop firms can create spikes on the chart. You know, it's a simulated trading environment after all. Or slippage. And if everything else does not work, deny payouts. A broker, on the other hand, since it is a bank, is highly regulated. Of course, you should choose a certified one. The business model of a broker is to make money from the spread and fees that you need to pay to put on a trade. The incentive for the broker is not for you to lose, but to trade as much as possible at the highest size possible, which is a challenge of its own. Most brokers offer variable spreads that increase with volatility, so you end up paying more to put on a trade when volatility is high. But it is certainly not of the interest of the broker to put up some rules to make your life even harder than it already is. A broker is a bank. There are no issues with payouts. When I scroll through Twitter or X, I see a lot of funded traders in the prop space complaining about payouts being delayed or denied. They end up recording videos of their trades and collect other sorts of proof that they actually won the challenge fair and square. I already addressed that the interest of the prop firm is to minimize payouts because that will directly influence their profitability. A proper regulated broker, however, will most likely not make an issue. If I request a payout, I have the money on my bank account within maybe 2 business days. There is really no limitation as to the amount or frequency with which I withdraw. Yeah, and lastly, there is no profit share. You simply make more money if you trade with a broker. When you trade with a prop firm and actually become a funded trader, you will not receive your full profits. You have to share the profit with the prop firm. On top of that, you will also end up paying a commission for each trade in form of a simulated spread, further reducing your payouts. When fake gurus show their success stories on how many funded accounts they stack, that means trade in parallel, they either blatantly lie about their success or they can't do simple math. You make so much more money with a real broker account. I'm giving you a concrete example right now where 2 traders take the exact same trades at the exact same size. One trader trades with a regular broker and deposits 5,000 euros. The other one trades with a prop firm and buys a challenge of equivalent size. I will already give you the conclusion. The guy trading with the broker ends up having 21,000 euros more in the bank at the end of the year. But I will, of course, walk you through it. But you can also just take my word for it or calculate yourself. Anyway, the initial capital requirement is higher with a real broker, of course. But I have not chosen an example of a rich person with a 6-figure account, but something more feasible, 5,000 euros. If you buy a 50,000 euro challenge with FTMO, you do not actually get a 50,000 euro account. Because if your maximum drawdown, which is one of those rules that a broker doesn't impose on you, when that maximum drawdown is 5,000, then 5,000 is your account size. Yeah? So you end up paying something like 350 euros for that with FTMO. And if you depose 5,000 in a real broker account, that's the equivalent, basically. So we assume we are deploying a conservative approach to risk management and risk 3% per trade. And that means we will end up trading 5 euros a point. Let's further assume we take 10 trades per day in the DAX, risking 150 euros and going for a risk to reward ratio of 1. That means when our winners reach 150 euros, we take profit. Otherwise, if we get stopped out, we lose 150 euros. And we will have a success rate of 60%. So that means 150 euros times 6 winners is 900 euros. 150 euros times 4 losers is 600 euros. And that means the profit per day would be 300 euros. Let's assume we trade on 250 days per year. And that would result in a 75,000 euro profit on the broker account. And with FTMO, there is a profit split. So you will get to keep 80% of that, which is 60,000. Oh, wait, you haven't passed the challenge yet. With FTMO, you need to pass phase 1 and phase 2. Phase 1 is 5,000, phase 2 is 2,500. That is profit you don't get to withdraw. So that means 7.5 thousand will need to be further deducted from the 60K that you would otherwise realize, which leaves you with 52,500. Let's also quickly talk about the costs of trading, because that is not insignificant. TD365, the broker that I'm trading with, charges a 0.9 fixed spread in the DAX. So at 5 euros a point, 10 trades per day, 250 trading days, that is cost of trading of 11,250 euros, which I would otherwise have more in my pocket, or you, if you trade with that broker. FTMO, even though it's a simulated environment, they also have a spread, and the spread seems to be variable. When I checked, it was 1.05. Let's just assume that is fixed. So that will be 13,125. That means without that spread, that's money you would have in your pocket. So it's a little bit more here with FTMO, right? Your profit before taxes with FTMO is 52,500, and it would be 13,125 more, but FTMO keeps the simulated spreads and doesn't pay them out for you, right? So you can also now play around with the number of challenges that you actually need to buy before you pass. Let's say you need 3 attempts. During that time, you will not get to keep your profits. And also, 700 euros will be gone for the first 2 challenges. Of course, the challenge that you win, that will be reimbursed. So, that's something to keep in mind as well. Your return on investment on a real broker account is, let's talk about that, is just 15K. But on that 5,000 that you would have to initially deposit, but that 5,000 is not gone. It's just a deposit. If you're profitable, you can, of course, withdraw that. It's like a bank account, right? So, it's 15 times that initial deposit, but of course it's more money. And yes, if you are passing with FTMO in the first attempt and you just paid 350 euros and made your 52,500, then that would be of course a 77x return, but less total profit. At the end of the year, if everything being equal, the guy who trades with a real broker account makes more money, 22,500 euros more in this example. That's the bottom line. I hope you understand that. So in conclusion, to sum it up, I would strongly recommend that you trade with a reputable broker instead of a prop firm. A broker has a different incentives than a prop firm. There are no additional rules in place, no challenges to win. There is no drawdown limitation, no consistency rule, nothing really that would make trading even harder than it already is. There will be likely no issues with payouts. And if you're a profitable trader, you will definitely make more money using a broker. I hope I could make that clear. So, if you stick around so far, now it's time for a broker reveal. I trade with TD365 for many years now. TD365 offers low fixed spreads. Other than most brokers who offer variable spreads, TD365 spreads do not change even if there is high volatility. And I have another example for you. If you, for example, compare trading TD365 on stock indices that I trade with a very popular broker eToro, you will see that it's actually very much worth your while choosing TD365 over eToro. In my example, we're trading the FTSE, that's the UK stock index. And for me, that's like a Big Mac, right? It's a commodity. It's the same product with both brokers. So my incentive is to trade that with whoever offers it for the least amount of money. And that is TD365. TD365 offers a 0.6 point spread in the FTSE. eToro charges 1.5 points. If you put 5 trades on per day, on 250 trading days, at 20 euros a point, because the FTSE moves slower, you have to trade a little bit bigger size, you end up paying TD365 15,000 euros in bid-ask commission, whereas you would pay 37,500 to eToro. In other words, just because I trade with TD365 instead of eToro, I will be 22,500 euros richer at the end of the trading year. Of course, this was an example, not necessarily to draw you in, because I trade the DAX, FTSE, Dow Jones and Nasdaq, and I certainly fire 5 or more trades per day easily. Compare the spreads for the products that you trade, even to those of prop firms, and calculate for yourself. TD365 is also full regulated, which is important. It offers 200 to 1 leverage, depending on where you live, which lowers the capital requirements to trade significantly. And it has negative balance protection, so you can't end up owing the broker money. I know many people personally who trust TD365, and I would never recommend that broker if I couldn't stand behind my recommendation. As I said, I trade with TD365 without any issues for many years now. So, if you liked this video, if you found that helpful, and you want to try out TD365, please consider using this affiliate link or scan the QR code. At no extra cost for you, I will receive a small commission that would really help me grow my channel and produce more content like this. In the sign-up process, it would be great if you could mention Karaoke Andy additionally. Anyway, thanks for listening. You take care of yourself. Karaoke Andy out.